All right. Good morning, everybody. So a lot of people are asking, what the heck happened yesterday? There was some optionality to it, but it also looks like it was just a technical pullback. There was no news attached to it. IBD and stock charts both are kind of highlighting technical pullbacks. It was certainly violent, to be sure. And the violence increased quickly because of the optionality. Now we're getting a little bit of a mean reversion. Markets around the world didn't try to bounce to recover. They just participated in the move after hours. But this morning, we have the Russell up 1%, NASDAQ more than 0.75%, and the S&P up 0.5%. The Dow is close. It's coming in quick. Hong Kong is flat, and so is Japan, basically just holding the line. We're going to get some data today that might rattle the markets. It's the PCE. There was talk about the Fed cutting without a need to cut, which is interesting. They've done it before. There's precedent back in 2019 where they did it. They did a preemptive cut on the idea that if they did it early, then it might help them out to where they wouldn't need to do a second one. So the idea of, the Fed raised rates really fast, and we still don't know how much needs to bleed into the system. And the idea was, well, since they raised so fast, they were very likely going to break something, and so far they haven't. Right, everything's still just trucking along. And the idea is they want to start to unwind before something is broke. And that is part of what fueled this rally after Powell. But still, we got a little ahead of our skis. As you can see, it's a busy day today. 8:30, 10, 10:30, 11, 11:30, and 1 o'clock. Got a lot of auctions tucked in there. Getting some jobs data. It's just going to be a really busy day. And the market is still looking for an excuse, right? It's a little bit of what yesterday was. So the technical correction was because of the 50-day line. That's kind of the one that I've come across multiple times. The distance from the 50-period moving average. On this show, I always focus on how far from the 10 we are. But a lot of other analysts will use different indicators, including something like the 50. That right there, we exceeded 7% on Tuesday, or was very close to 7% on Tuesday. And Wednesday, that little rally got us above 7%. and that did it. There's a June example of the same thing back here. July. It's a smaller example back here. We didn't quite get to the same distance, but cheers, huh? It was a fantastic move, but without having the catalyst, the why behind it, it was hard to stick the move and take most of it. Either way, we hit the put wall. We actually had gone through it. That's the new put wall. That's not where it was yesterday. So now we're above the put wall, above the volatility trigger, kind of resting on one of those voodoo lines, and we're already 1 ADR half to the upside. So let's just kind of do it this way. Zero gamma, we're a long ways from that. Volume's nice and normal, right around 100. It's exactly where we want it to be. There's no market maker move showing. We came really close to that 10-day moving average yesterday. We're still above the weekly pivot point, just barely. And we've made contact with the daily pivot, so we're not in an MDP. With that daily pivot, we did come into it from below, so we're going to consider it a resistance until we're clearly above it again. And like I've mentioned before, when we get to an ADR half early in the day, it opens the door for us to go to the other side of the ADR, which would be 47.31, the cog line. And that would put us underneath that weekly pivot point. To get there, we're going to have to work through this voodoo line, 47.45, and this voodoo line, 47.70-ish. This market breadth is focused on these three moving averages and this Bollinger Band. The blue there is a 10-day moving average. And the idea behind this is we want to look for long opportunities when we're above the moving averages, short opportunities when we're below the averages. Well, that move yesterday brought us really close to that moving average. And it doesn't matter what I'm showing up here. This is independent of anything that's in the upper part of the screen. It's looking at the NASDAQ index, not the NASDAQ 100. We can change that to the NYSE index, and you can see how we're already through and we're into the 10-day. If we measure last week's range, that gives us 47.21 as the halfway mark. If we measure yesterday's range, 47.87 is now resistance. It's the half back from the range yesterday. That would be really close to the full ADR and really close to last week's high. Last week's high was 47.91, and we're talking 47.87, so pretty close. Ten-day, 30-minute volume profile, and hey, look at that. We brought the point of control up to us. A cog line is a center of gravity, COG. To explain how they're developed, it would take way more time than we get in here, but it is a multi-month examination of trading activity on the smallest scale imaginable, crawling through the charts to identify and validate a level. It's a lot of work. We tend to give up on that work after a while because the lines kept lining up at the same spot. 11s, 32s, 92s. So on the ES, if it's 46.11, that's a cog line. 47.11, that's a cog line. 47.32, it's a cog line. 11s, 32s, and 92s, COG. You can try searching for it, but what you'll probably come up with is John Euler's cog line, and that's some indicator that has no bearing on what we're doing. I think the person who named him didn't realize John Euler had already come up with something called a cog line and called what we're doing a cog line. And there's a little bit of confusion there. That sell-off yesterday brought us down into that area where I had mentioned previously it was likely to be the point of control if we ever went back into that area and just added a little bit more volume. That's all we needed, was just a little bit more. It didn't hurt that over the last few days, the volume that was down here has disappeared. As each day goes by, we lose more candles from the left and build new candles on the right. So we don't have an equal footing of volume that was at the lows here with the point of control at our highs. We've just got this significant level of volume up here and minor levels down here. We also have an air pocket. So if that low that we built yesterday doesn't hold, we're likely going to fall through there. I mentioned 47.50, 47.40. This was the area where we had bounced before. Seemingly miraculous bounce. There was nothing there to hit, and we bounced anyways. It's definitely the level to watch, right? It was the level yesterday, and it is still now the level to watch, because if we break that, it's been a very solid level of support. It will become a very solid level of resistance if we get through it. Below that is the roundy at 4,700. That will be the target if we do break that low. And we're likely to get there pretty fast. We did hit a cog line yesterday that had been underneath us for a little while. We sliced right through it like it wasn't even there, which generally happens during events. Cog lines and VPOCs and things like that, they can't stand up to flow that we get through events. We do have a new VPOC though. 48.23. So now we got one overhead to deal with. And we are 4.34% above the 10-week. So we're coming back in after getting a little overextended. We can look back and find examples where we've been more extended than we were earlier this week, but they are rare. One was after COVID, when we really started expanding from those March lows. And again, in the same year, one more time around August. Other than that, there's not a lot of historical precedent for being as far away from the 10 as we were. And you can see how it lines up really close with levels that are just like a line in the sand. Enough is enough. And that's what the market gave us yesterday. On this one back here, this is all the way to the left. It's that August print. After we got that, we still did continue to go up a bit more. So here's that whole week where we continued to expand way above that 5% level, but that was the end of it. The next week, we sold off and got all the way back to the 10 plus some. Here's another example where we really expanded beyond the 10-week. We topped out. Notice we didn't just sell off and crash and burn. We topped out for almost 3 weeks, just holding the line, really not doing much of anything. Had a minor sell-off finally to break the monotony, and then we started traveling again. So this sell-off yesterday, it was violent and it was fast, but it does not have to mean that we're going down in a blaze of glory. It's easy to get caught up in the idea that, oh yeah, now we're going to short this sucker. Yeah, but, you know, here's another one from earlier in the year when we got to that same height above the moving average. We had a minor sell-off for about a week, and that was it. Within the next week, we were right back at that same level, and we just continued on from there. So this is not enough to try to short everything. Here on a daily chart on the SPX, this pullback isn't even enough to break the uptrend. We're still in an uptrend. Keep that in mind. And that's a daily chart, right? So it's not like we had to go out to a weekly or a monthly to point out we're still in trend. We can do it on a daily. Same thing here on the weekly, however, that's still in a trend. And the monthly is still in a nice, healthy trend. So just keep a little bit of perspective, right? We can be negative for a week or two, no doubt, but it seems to be the choice between probably a little negative or choppy sideways. Those are the base case arguments right now. And then, of course, there's always the possibility that we rally right back up and we keep going after we reset this pullback. I mean, that's possible too. So Bitcoin is up 2%. China ADRs through the K-Web is up 1.75%. Nat gas, junk. Semiconductors, solar, the FANGs are up 1%. Tech, communications, which is just more tech. Growth, specifically just growth, up this morning. Right? Not value. Wow. It could be an awesome rip your face off rally day. Which would just be whiplash at this point. Why not? And the VIX is down 1.5%. Now, interestingly enough, this morning the dollar was moving around to the downside, and sure, it took U.S. dollar Japan with it, but I was looking at that sell-off, and I'm appreciative, obviously, but if you look at how the ES and the NASDAQ moved, this rally didn't come from the dollar selling off, because this rally happened while the dollar was basically sideways and kind of rallied here a little bit. And then we had this really big sell-off and we got nothing. I mean, nothing. We didn't get anything out of that. That is concerning right there. I don't know what to do with it, but definitely needed to point it out. And the 10-year yesterday, even with all that madness, it still closed below 3.88. And sure, it rallied a little bit too, but it's already given it back. And bonds did well into the later part of the day yesterday. Risk parity, like a zombie back from the dead. I think this is worth keeping your eye on. It seems like we're getting a little bit of a rising tide this morning, but it's only here in the US, right? If you remember how we started the day looking at everything that was going on around the world, it was only the US markets that were up. So we want to see that broaden out a little bit. Want to see other sectors more than just the FANG and more than just Bitcoin and pot stocks. All right, for those China ADRs, it's easy to get lost in all these other names. I tend to focus on the bigger stuff, Baidu, Baba. So we can see Baidu, really big gap up. It's trying to flag a little bit up there. If you look at that big red day that it had yesterday, turning from red to green, it ran all the way back up to yesterday's high. And now it's kind of selling off a little bit. That's not a bad setup, really. The idea would be maybe it sells off and it bounces off of yesterday's open, and then we continue that rally to the upside, breaking out of this zone. It was already a really big move, having closed down here, and we're talking about, now being way up here. BABA's another one. Really big gap up this morning, continuing to bull flag, red to green, but it's still inside of yesterday's range. So BABA and Baidu both are still inside day. Futu, it's in there, but I'm not as big of a fan of this one. Still strong bull flag push to the upside, red to green, not a gap up red to green, but rather an open and run. Yeah, we'll take what we can get. JD, gap and go. I'm a little suspicious of JD. We're not even through that 50% mark yet. So, highlight yesterday's zone, mark out 50%. That's how far we made it in the gap up. And then it's kind of hovering underneath there. EDU, this one always holds a soft spot for me. Memories. In the grand scheme of things, this is working its way back up after just a beat down. And it all happened from an analyst who did a deep dive on this company back in the day and put out a hit piece on it at like 2 o'clock in the afternoon and hit this thing into the dirt, and it just kept tumbling. Well, it seems like they got their act together and they're working their way back up. It is a heck of a company, which we can't always say that about those China ADRs. But it's still got a long ways to go to get back to where it was. A little red to green this morning, still underneath the 50% mark. PDD. Now this one's been doing really good. Nice gap up this morning. Bull flag, still inside day. Still underneath the 50% mark. So a little bit of concern on that. Certainly some of those others were doing better. Li Auto, EV. This one actually capped lower before trying to rally back up a little bit. I probably wouldn't mess with this one. So the China ADRs are looking pretty good. We got the airlines this morning trying to wake up a little bit, red to green. That's a Busby, right? I like Busbys. Focus on the 50% mark. Got to at least get above that to even get things started. American Airlines is another one. Really nice TRB setting up here. If we can break outside of yesterday's range, then the target would be back to the top. I got to say, I'm probably going to just go over there and buy a 15 strike call. American Airlines got nice options. They're really cheap because it's a really cheap company, and it's a YOLO play. But, when you buy a lottery ticket at the gas station for $1, I mean, nobody likes to lose, but you're not going to cry about $1. I don't know what that option is going to cost, but I'm pretty sure it's really cheap. I'll probably go for the end of the year, like the Jan 29 or December 29 options. Not going to overthink this, right? But just airlines are cheap, and American Airlines are really cheap options. And a TRB would be back up to the top here. 15 strike just kind of makes sense. Of course, we could dump, crash, and burn, and then, it isn't going to matter. Yeah, Delta Airlines has got the same setup, kind of. TRB, midpoint 50 halfback break. So if we get above yesterday's high, we could run back up to 43. But the options on this are going to be, a little more expensive than that American airline call that I was just talking about. And chips are up this morning. I mean, who don't like chips? MU, is up on that data that they put out, but maybe the others are a little in sympathy. They could have just had flows of their own anyways. TSM is looking really good. All of these, honestly, AVGO, Qualcomm, SMH, they're all doing really good. Even AMD is up. Well, it was reading 0.5% there a moment ago. It just fell out of bed. I'd say these are getting a little ahead of themselves, right? They're hanging out over the front of their skis. Some probably due soon for a little bit of correction, but I wouldn't try to short it just because. Probably not a good enough reason. Bitcoin is up this morning, so we'll automatically assume that so are the proxies, but we don't really have to assume. We can just come in and look at the list. SOS, EBON, CAN, Mara, Riot, MSTR, TSM, Coin, the usual suspects, NVIDIA, PayPal, AMD, Square. I know you're probably thinking, wait, what? That's not crypto. Yeah, I didn't put this list together. Someone much smarter than me put this list together. Tom Sosnoff and his crew. The guy's like a certified genius. If we lose the Bitcoin push today, I think we're going to lose some of the market today. And there's a little bit of a concern with both Bitcoin and China ADRs up this morning. That's a little bit of like cats and dogs playing poker. So there's a belief right now that it's an either or dichotomy, that you're either running Bitcoin and you're not weighed down by the China ADRs, or you're playing the China ADRs and you're not weighed down in coin. In the modern world where we can trade anything, I don't quite understand why it would be such an either or scenario, but that has been the prevailing wisdom. Well, if it's either or, they're both up today. One of them's lying. I'd rather just like to think that they're both up and then that's a good thing, but I'm suspicious. So I'm stuck wondering which one is lying. Considering that Hong Kong and Japan are both flat this morning, and I come back and look at the China ADRs being up, I kind of gotta believe there's your liar, right? Kind of makes sense to me. The EVs are in play this morning. And, to be fair, everything's up, right? Everything is up. I can pick just about anything out of my watch list and like, oh, look, these are up. Huh, da, da, da. NIO, 3%. Tesla, 1.75%. Ford, 1.25%. Poor old GM isn't up. But GM has already had a really beautiful run. I think GM might have something to offer, really. Yeah, let's look at this a little bigger. What's So all we're doing here is measuring yesterday's range. We can see how GM yesterday performed a TRB perfectly, and it made it back up to the top of the zone, just like it's supposed to do in a TRB. And then it took a smackdown and collapsed. But it's still holding above that 50% mark. That might be the key to something. If we break that 50, we should get back to 34.5, relatively easy. Be a pretty shallow drop back through that zone. And in fact, really, we could try to close this gap down here at 34. Kind of like 34. You like it. If you was to get aggressive, you could use, that 29 December I mentioned earlier. 34 strike. Oh man, it's $13. Talk about breaking the bank. You pick up 20 or 30 of those, just kind of fade them out on the move lower. It's not that bad. And if we were trying to find some liquidity, then looks like we got a bunch of halves that just got wrote. But we can pick up a 34 strike for about 52, 51. It's got some reasonably decent open interest. I don't think you need that much time, though. That's why I was a lot closer in. I wouldn't give it a lot of time. It needs to really do the thing or just get out of the way, right? Because like I mentioned earlier, we're talking about a small pause in the big grand scheme of things. We're not talking about selling this thing off, right? So we got nat gas, uranium, solar. There's a lot of cheap solar plays that you can get into. Certainly a ton of Bitcoin stuff and EVs, China ADRs. Precious metals, gold, silver. Man, everything's up. It'd be a lot easier to say what isn't up. So if we keep this broad market bias, then we could keep our range for the week. And remember, we needed a pullback. So pure price method on Apple, we have a higher low, and right now we have a high. So this needs to be resolved. Either we come down and break this pivot point and have to make an argument about this distance here being enough to be considered a pullback. If we used this one, then we can use that one. So if this is a pullback, then that would be a higher low. And falling away from that would be a lower high. And if that's the case, breaking through that triggers our downside as a a trend reversal. Short duration stuff, right? Because I'm on a daily. But if this doesn't count, if that wasn't enough to be considered a pullback, then we got to come back down and break this 192. What would be more likely is we come down and tag that 192 and we pull back up high enough to actually then set ourselves with a lower high, if we argue that that isn't a lower high right there. And I don't know, I think the argument could be made that this distance isn't enough to be considered a pivot point, in which case that wouldn't be our lower high. Just like we would measure it this way, and we would just skip any of this. You can use that zigzag indicator for that, right? And set it at like 4. Nope, that's the wrong one. There we go. That's the one. We have to set it pretty low. We can't even get it low enough to register that. So there it is. Something like that. That's a 1%, right? So if we took off, made it 1.5, this pullback doesn't even register. Got a lot of gaps on a lot of FANG names, and the FANGs are up a little bit this morning, but most of them aren't even up half of their move of yesterday. Looks like Meta is one of the few, and it maybe I misjudged it. Yeah, no, it's above. So Meta is one of the few that are above that halfway point. I mean, that doesn't bode well, but it gives you a line in the sand. If we're going to get that broad rally that you're looking for, kind of going to need the FANGs at that point. So mark their halfway point, and collectively, if they can get above their own 50% mark of yesterday, it'd be a pretty good line in the sand. The NY FANG doesn't move in the pre-market, so we can't use that. But there is the little homemade version. You can do it on Thinkorswim, but I've already got one wrote on TradingView, so we'll just use this one. Now, this has weights to it. And look, I know, like, oh, cool, man, he's got weights. I bet that's fantastic. But I've proved more than once that those weights, as cool as it looks, they really don't add anything. We can put Apple, Microsoft, Google, Amazon, Nvidia, Meta, We can put all those names in here with no weight whatsoever, no numbers behind it to make it look fancy and complicated. And you're going to get a chart very, very close to what we're looking at right now. So I will share this if you want it. I mean, I don't care. I'll give it to you. But if you're on a broker or a charting platform and you can't do this, don't stress on it. You're not missing anything. This shows the fangs as that Mag 7 chart that we're above the 50% mark of yesterday, right? Oh, not above the 50% mark of yesterday. That wick was a little misleading. So we're not even through that 50%. I'd kind of let that be my line in the sand. That'd be matching us up with that same statement that I said about the fangs a few minutes ago. And we kind of need to hold this level if I zoom out far enough. So that would be November 2021. That high from back there. We're above it now. We need to keep it. Another way you could look at it is we need to stay above the 10 and the 20. I'm on a daily. And this is a tradable version of the fangs. It's a sector ETF, FNGS. This also moves in the pre-market. It's one of the reasons I like it. Rather than looking at the NY fang, which doesn't move in the pre-market and you can't trade it. That's above the 50% mark. So it kind of needs to keep it now that it took it. We're also back above the 3, which is a surge play. You can see where the 310 crossed price first, then the moving average. That's what we call a surge play. As long as we've got this dollar in the dirt and the 10-year doesn't rally, everything that we just looked at should follow through on the day. Should. Just keep your eye on the news because right now it really looks like the market is looking for an excuse. Everybody be careful, be safe. I'll see you all tomorrow.